Hey, what is up, guys? My name is Omar, and today we're going to be taking a bit of a look into options trading on Robinhood because I know there's a lot of new people trying to start investing, especially with like stimuluses going around and people getting more money. They want to start investing, and I think Robinhood is a good like starter app for people to kind of grasp the understanding of investing. I don't think it's the best app for people to invest on, but if you're just learning, the UI and everything is just so simple and everything is laid out pretty clean, and they have a good mobile app that this is a good place to just learn and then move on from Robinhood. So this is like a good like stepping stone for you, if you would say. So as you see here, I have two tabs kind of. It says options, which are going to be my options trade that I have open currently. And then you're going to see your stocks, which are like shares of companies or ETFs that you own, okay? The biggest difference between options trading and stock trading and why a ton of people fail is because with options trading, you have an expiration date, which I'll show you right here. Um, this expiration date is going to be the date that actually like your options contract expires. So right now we're on a buy call tab, and if you look here, I'm saying that expiring April 23rd, that IWM, which tracks a ton of small caps, this could be any stock, or ETF that you want to trade options on. Um, what you're saying is you're gonna have IWM be $230, which is very unrealistic by April 23rd. Okay, that's gonna be really unrealistic because you only have 2 days for it to move $5, and IWM doesn't really do that. So you have to know how volatile the stock is, and that will kind of give you a better idea. So with options trading, my biggest number one rule is always get more time than you think you will need, because what happens if you buy a call and the stock doesn't move enough is you're going to get something called theta decay, which is also known as time decay. So even if you have a call, which means that the stock price is going to go up, you could lose out because the stock doesn't move up fast enough. Does that make sense? Because if you have this expiring on April 30th and it's April 29th and you're still, if it's at, you have the 230 strike and it's only at 225, you're going to be losing a lot of money because every single day is just going to slowly take away time decay, which is known as theta, which you can see down here. These are like the delta, the Greeks is what they're known as, okay? And they give you the prices here. That's a little more, advanced stuff, but all you really need to know when you're options trading is get more time than you think you need and time that you can afford, because the further out you go, the more expensive it's going to be. So if we look here, like 226 for May 14th is $4.67. But with options trading, everything is done in multiples of 100. So all you have to do is move this decimal spot two places. So like it's going to be 465 or $467, I'm sorry, to actually buy this contract, okay? But if we go to April 23rd, you'll see that this $226 call strike is actually only $100, but it expires in 2 days. So if you want to have time, you have to pay for time. So nothing's free. So if we wanted to, you could even go all the way out to December 17th and then buy that same $226 strike, but it's going to cost you $1,526. So there is a big difference, because with time, that is the most valuable like asset when it comes to options, because a lot of people lose options not because they guess or assume that the stock is going to move in like a certain way. They lose it because they don't have enough time. And once you have enough time, it makes options trading so like stress free, because you can allow for the stock to move up and down because you have time on your side. When you only do these weeklies, you're trying for like that stock has to move super quick or else you're going to lose money. And there is nothing wrong with doing these like monthly, weekly trades. A lot of people make a lot of money with like low amounts. So this is where you'll see a ton of percentages come in. Like someone who bought this today, they made $90 off of it. And if you want to put, you're assuming that the stock price is going to go down if you buy the put, okay? We'll get into the selling tab maybe in a different video, but it is really nice to just be able to know what a call and put is. So a call, you assume the stock is going to go up by your expiration, and then the put means you're going to assume the stock goes down. So since IWM is actually green today, up 1.24% right here, all the puts are going to be red because the put assumes that the stock is going to go down and it's up today. So people lost money, okay? Um, and so what you have to realize is since we're on the buy tab, somebody is selling us this contract. So they're selling it to us, okay? Whenever you're buying something on the stock market or you're selling something, there's someone on the other end. It's always a transaction, okay? And just know that a ton of options traders do lose money. A lot of options do expire worthless. So it's very hard to, actually hold a option till expiration. What I like to do is I usually like having a set limit on when I'm going to pull my options out. We can actually look at this option I have open right now. So I bought this at 1040 yesterday. So I bought it like right here, 1040, 1050. So I paid $266 for this, right? And I've made $191, almost 76%, in just, technically, I guess 1 day, maybe 25 hours or so. And I just held it because I played the option correctly. I bought it at the right time. But say someone bought a put, their option probably looks like the exact opposite as this. So if we pull up IWM here, we can just look at the chart and we can, kind of compare it. You'll see that how it looks similar to the option, that is because this still has a ton of time. It expires on May 7th, so I still have a ton of time. This is going to look relatively like the stock, the ETF, right? So if this continues to rip up to like 226, I can expect this to be around 450, 460, something like that, So since I have time, this is going to move relative to the ETF or the stock that you are having the call or put on. It is really nice. I love options trading because you can make a lot of money, but you can also lose a lot of money. If we look at my portfolio, this is my all-time portfolio, and I've always been options trading on my Robinhood account. I have an M1 Finance that's more like long-term. And yeah, so as you see, I lost quite a bit of money very quickly from February 19th to in 1 month, basically. I lost almost $1,000 or like $1,200. So you can lose a lot of money. You can make a lot of money. My biggest tip would be one, get more time than you think you need because you'll always end up needing more time on options. And two, take profits. I'm probably going to lock out around these, probably I think around 200 or like 80%, something around there is when I'm probably going to just pull out my profits because I'm fine if IWM keeps ripping, but I made my money. I'm going to take my money out and then I'm going to look for a next trade or just hold my money. But nobody ever went broke taking profits. So I know we see a ton of these people who make $1,000 in like 10 minutes or they churn $500 into $500,000, and that is awesome. I wish, I wouldn't be mad if that happened to me, but I just like taking profits at a certain percentage or things like that. So I know people who will pull out sooner or they'll pull out later. Just get something that works for you. Let your runners run as well. Like once I realized this was going to be a winner trade, I didn't want to take profits at like 25%. I knew this was going to run a bit more. And it broke my price targets and things like that. So I knew that I have a stop loss in mind, and it's only $438 in my account, which isn't that bad. So always go in options trading with a plan on how to execute your option because that'll save you a ton of money. And yeah, so I'm finally green. I'm up almost $200 now on my all-time tab after being just down so much at the beginning of the year. And I'm feeling pretty good. I like options trading. It's very fun to me. Don't ever try to like YOLO or make quick money unless you're okay with losing like your money. Only invest what you're willing to lose because I would hate for you to invest $1,000 and like that is your rent for next month. So if you lose that money, then you might not have a place to stay at. So please invest responsibly, but at the same time, I am not a financial expert. I'm just some 19-year-old on the internet telling you what I think, and this is by no means information that you should be using for your own trading. This is just what I'm saying. So do your own research, do your own analysis, and yeah, that's all I can give you. If you have any questions, leave them down in the comments. Feel free to subscribe if you enjoyed and like the video. I'm out. Peace.